Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. You're looking at a weekly chart now. You see that primary pattern overall held. You failed to get a couple weekly closes above that two-third retracement of that last big down move. Therefore, that overall pattern remains bearish. Market rolling lower. Drop down to a daily chart. We're green lighting sell signals, selling rallies on the short term too, out of respect for that turn in the market. So some of your shorter term patterns, your 6-day, your 12, they have rolled lower now, and as day traders we're going after the short side. Interestingly, from the longest term perspective, not many people trade it that long term. You're rolling over there also, so the short term in line with that very long term. Headed south in the Aussie right now. Aussie, we'll see if that's a leading indicator or Aussie kind of lagging the other currencies against the dollar anyway. Next market we'll take a look at will be dollar Swiss. Dollar Swiss, I think it's worth looking on the weekly chart. Also get the big picture there. You can see that primary pattern, and it really, I guess you'd call that a short-term primary pattern, just 1 year. But if you go back a couple of years, you can see that overall pattern is bullish also. So dropping down to support here, that's just a two-third retracement from this low up. So that's your two-third retracement of the primary pattern. That's a big level, by the way. Two-thirds of a primary. Big news. As Charles Dow said over 100 years ago, a market can retrace up to two-thirds of its move and maintain a primary pattern. So that's why that level is so important for us. So dollar Swiss holding long-term support. Next market, the dollar index. Dollar index driving towards the low of the previous 1 year range. You've got support all the way down to 90 also. This is a great chart to look at because it gives you scale. You had that massive move, and you're finally starting to see some kind of a retracement to it, albeit, into previous support there. So it wouldn't surprise us if it continues to claw lower, but the big picture, at some point over the next month or two, you're going to start to see a lot more positive U.S. economic data. We're seeing that in real-time store sales right now. That news is not going to hit the market until we see, the April retail sales number coming out in May, and then the May numbers coming out in June. And that's why we know we need to be patient in this game. If you look at the last couple of reports, we've been pretty much saying, we're buying dips in the euro, selling rallies in these dollar pairs short term, and that's why. So you could see some more downside action here in the dollar index, although you're coming up on support pretty quick here. Next market, the euro. There's your weekly chart. That's probably a pretty good upside, 118 there. You've got you're just starting out into a short squeeze, and that's how markets top out. Essentially, you squeeze all the shorts out of there, and then the market makers can swing back the other way, more comfortable. Market makers don't want to get caught short in here. So this market looks to be set up for a drive to 118. That could be quick or it could be a slow grind, but one way or another, it's going to be tough sledding for the shorts in here. And as we've been saying for the last couple of weeks, they're buying dips in here. Here's a daily chart. Oh, and there's that level. If you watched this last week, we said, hey, there's a good possibility of a nice swing trade down here, and that's why you saw it came to fruition. Didn't quite get to 112, got to pretty close though. But there you saw it. You had that good support right there. That held and put the market in a position to make a higher high to take out the March high there, just barely. So we'll watch that. But as I said, I think 118 is the level to watch, and we're looking at continuing to buy dips in the euro on a short-term and intermediate-term day trade, swing trade. Take a look at the gold market. Gold, real interesting because you took out some pretty stiff resistance when you took out the March high. On the other hand, pan out to a weekly chart, and you're at that two-thirds level from the high. You take the high of the dead cat bounce here, essentially the 2013, the summer high of 2013, all the way to the low of 2016, and now you're just below the two-third retracement there. Big level there, and it's similar to the euro in that it's been been pretty good upside. Would have been able to make good money as a buyer at dips in there. On the other hand, when you look at the big picture, wow, you're a long way from the top there. So very definitely in a bear market now. 1300 big level. It's a round number, so it's a big psychological number, but it's a big number for technicians also. So 13 even. We'll have to see how it reacts to it. But if you see a pause and then you see a shift of momentum lower, I'll definitely be taking shorts there. I'll definitely be using leverage to go short the gold up at those levels. Gold's been pretty good to me this year. Luckily, I was a little bit greedy and I took the money. And I say luckily because otherwise I would have been underwater on that. But I'll take a good look at it right around the 1300 level. Last market we'll cover will be U.S. interest rates. Here's where it gets interesting. Anytime in the past that you saw dollar weakness like we're seeing, like the scale we're seeing now, the momentum up in the euro, down in the dollar, is because you had interest rates dropping sharply. This last rally in the euro, this last down leg in the dollar has not been accompanied by weaker rates like that. You can see the interest rates pretty stable. Here's the long-term picture. You can see they've been down for a long time, but they've definitely stabilized under 1.5% here. So the U.S. 10-year rate 1.8% stable. You didn't see that big downstroke that you've seen in the past when you saw that wicked euro strength, dollar weakness. So from our perspective, that tells us, hey, you probably closer time-wise to a turning point in the dollar than otherwise. But price-wise, you got to look out because you can see a big spike up in that euro, big spike down in that dollar, kind of clear the decks there for an eventual turnaround that we see, and they'll say that's based on a big pickup in business in the U.S., which we're seeing right now. My name's Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.